Homelessness and dignified housing have been and continue to be a challenge in the U.S. To address this issue, the U.S. established the HUD as a cabinet department in the executive branch of the U.S. federal government in 1965. By the 2000s, the HUD increased home ownership to more than 60%. Currently, it provides public housing to approximately 7 million families and subsidy and voucher programs to 4.3 million families. In the 2000s, the Federal Reserve lowered interest rates to about 1% to prevent further economic recession issues. Around the same time, the HUD implemented regulations that require the increase of government-backed loans to increase home ownership. With the lower interest rates and encouraged by government initiatives, lending agencies lowered loan requirements and increased the number of adjustable rate mortgages. Low investment returns led investment banks to develop mortgage loan investment programs under the assumption that the value of the homes would increase or stay constant. Unfortunately, the borrowers did not understand how the loans work. In 2007, borrowers started to default on their home loans. The increase in home loan defaults devalued the homes and generated losses for the investors, which impacted economies worldwide. Prior to the crisis, the HUD did not provide proper education or counsel to the public about the risks of adjustable rate loans. The HUD did not properly use data to assess initiatives or propose new regulations in the housing market. The HUD and the U.S. Treasury Department did not work together to understand how lower interest rates could impact the housing market. Alfonso Jackson led the HUD when the crisis started. With over 20 years of public service experience, he implemented management controls and made significant improvements to the HUD departments and programs. He reduced homelessness by 11.5%, and in 2005 to 2006, he achieved a combined decrease of over 20,000 chronically homeless cases. He was an outspoken government official and fearless to diversify government housing programs with minorities and women. Allegations that he was giving preferential treatment by granting contracts to friends forced him to resign in April 2008. Stephen Preston replaced Jackson. Preston had extensive financial background but very little housing experience. His experience in finance and having led the U.S. Small Business Administration were invaluable at the time of managing the crisis. During his leadership, the HUD implemented the Housing and Economic Recovery Act of 2008, which increased regulation of government enterprises, increased emission supervision, and established more regulations of mortgages and customer protection. While the HUD was effective at reducing homelessness and increasing home ownership, they did not help to effectively regulate the rest of the housing market. The HUD should have joint efforts across multiple government departments and agencies to more effectively push legislation in the Senate and better understand impacts of cross-governmental initiatives.